Good afternoon, everyone, and welcome to today's virtual non-deal roadshow. My name is Danielle Saul, virtual event moderator here at Remark Financial Communications. And on behalf of our team, we want to thank you, especially those of you in Chicago and surrounding areas, for joining us today for the presentation of Perpetua Resources Corp. Perpetua Resources is currently trading on the TSX under ticker symbol PPTA, as well as the NASDAQ under the same ticker symbol PPTA. Presenting today is IR Manager Chris Fogg, who will be joined by CFO Jessica Largnon for the Q&A session. Now, without further ado, Chris, I'll hand over the floor to you.
Hello, and thank you everyone for joining us today. Our vision at Perpetua is to develop one of the lowest cost open pit gold mines in the United States, provide the country with a critical mineral, and to restore an abandoned brownfield site. Please take a moment to review our cautionary language on slides 2 and 3. Why Perpetua? Perpetua Resources' investment thesis has never been stronger. We plan to redevelop one of the largest, lowest cost, and long life gold projects in the United States. Our project has great economics with a 15-year reserve life, a payback period of less than 3 years, and an internal rate of return greater than 20%. And we have a strategic and valuable byproduct in antimony. Our project is also in one of the best mining jurisdictions in the world, and we have strong community support. The strong support we have in Idaho has been built over the last decade as our communities and politicians have seen our commitment to responsible mining and restoration at Stibnite. So one of the many reasons we are so unique is because we will take an area abandoned after 100 years of mining activity, most of which was to support World War II and the Korean War, and we'll use a sustainable approach to restore the environment and develop a modern mining project with critical mineral production. In the next few slides here, I'll touch on our feasibility study highlights. With 4.8 million ounces of reserves, the Stibnite project is one of the largest gold reserves in the United States, not owned by a major producer. And it is the 7th largest reserve out of all US gold deposits. In total, we have 6 million ounces of measured and indicated resources, with an additional 1.2 million ounces of inferred resources. And this slide does not include our significant antimony endowment, which has reserves of 148 million pounds and 206 million pounds in measured and indicated resources. When it comes to open pit gold mines, we have one of the highest average gold grades, with approximately 2.2 grams per ton in the first 4 years of production and 1.4 grams per ton over the 15-year mine life. The historical tailings alone in our plan have 1 gram per ton gold and will be reprocessed early in our mine sequencing. Our annual gold production will average approximately 300,000 ounces per year over the life of mine, and more than 460,000 ounces per year in the first 4 years, which would make it the largest producing mine in the United States outside of the Nevada Gold Mines joint venture. Average daily mill throughput will be about 20,000 tons per day, or about 7.3 million tons per year. And the process plant is designed to process sulfide, transitional, and oxide material from the different deposits. The Stibnite project will be powered by the lowest carbon emissions grid in the nation. Our ability to source low-cost Idaho hydropower, combined with a low strip ratio, and an antimony byproduct credit of $70 per ounce, we are well positioned in the lowest quartile of the global cost curve. Life of mine all-in sustaining costs will average less than $650 per ounce, and in the first 4 years will be less than $450 per ounce. Our project's free cash flow profile demonstrates exceptional values at a range of gold prices. Using our base case assumption of $1,600 per ounce gold price, our project has an NPV of greater than $1.3 billion using a 5% discount rate, and it delivers an internal rate of return of more than 22%. We have good leverage to higher gold prices as well, where the NPV increases to approximately $1.9 billion at an $1,850 per ounce gold price. But most importantly, our project is resilient to lower gold prices given our solid position on the cost curve. Based on our current market cap, we are trading at nearly the widest discount to NAV despite achieving significant milestones. And I think this represents a very attractive entry point for new investors. Now we'll touch on our strategic and valuable byproduct, antimony. Antimony has been identified as one of 50 critical minerals, given the United States has no primary production, and given that China, Russia, and Tajikistan dominate the world supply with more than 90% of global production. The US, Canada, Europe, and Australia have all included antimony on their critical minerals lists. Historically, antimony has been used for its properties of strengthening alloys and making them resistant to corrosion, and also as a flame retardant. Currently, antimony is being used in bearings for wind and hydroturbines, tinting for solar panels, and in semiconductors. And most notably, it is also used in a low-cost liquid metal battery. The current administration has made clear that securing America's critical mineral supply chain is essential to our national and economic security, and we couldn't agree more, and we are ready to be part of the solution. In fact, our project alone in the first 6 years of production could supply more than 35% of annual US demand for antimony. We plan to produce antimony concentrate at scale, but we are also evaluating opportunities to produce military-grade antimony trisulfide. We are both excited and proud to have recently been awarded not one, but 2 grants from the US Defense Logistics Agency to study this potential. We are confident in our ability to meet the military specifications because historically, our site supplied the War Department with 90% of antimony demand and helped define the current specifications for multiple munitions products. Perpetua continues to show the role modern mining can play in solving the world's climate change challenges. Last year, we signed an agreement to supply a portion of our antimony for Ambri's liquid metal battery. Our agreement establishes the foundation to help facilitate the decarbonization of energy grids. Ambri has developed an antimony-based low-cost battery for the long-duration energy storage market. And our project will provide them antimony from the only responsible and domestically mined source of the critical mineral. Our minimum supply commitment can power over 13 gigawatt hours of energy storage. Just to put that into perspective, that is more than 8 times the total additions to the US energy storage market in 2020. And this amount of storage is enough to power approximately 1 million American homes with solar power for the 20+ year lifespan of the batteries. This partnership directly links the restoration and responsible redevelopment of our project to achieving our nation's energy goals. Perpetua's restoration and mitigation plans provide early action for water quality and legacy feature cleanup, as well as concurrent restoration and reclamation for any new disturbances. Our project will ultimately improve water quality, restore fish passage that has been blocked for decades, and clean up legacy tailings and waste sites. We get to solve environmental issues through the funding and development of our world-class asset. Before we move into our upcoming milestones, I think it's important to provide some context on where we are today. As you can see from this slide, it has been a long process. We began environmental study work back in 2010, and in 2016, we submitted our original plan to the US Forest Service, kicking off the federal NEPA permitting process. The stakeholder feedback we received over the years has been instrumental in helping improve environmental outcomes for our project. Following the draft EIS comment period back in 2020 and our modified improved plan, the Forest Service eliminated 2 alternatives from further consideration. The supplemental EIS is only focused on our improved plan with 2 different access routes into the site, and we look forward to it being released publicly very soon. We are confident that the additional evaluation contained within the supplemental EIS will clearly show improved environmental outcomes, and we are confident the additional analysis completed for the supplemental EIS should lead to the Forest Service designated a preferred alternative, which narrows the remaining scope even further. So while this has been a long journey and a long process, you can see that we are on the downhill side. I've covered several of our recent achievements already throughout the presentation here, but I'd also just like to highlight that we've been trading on the NASDAQ for well over a year now. In August of 2021, we raised gross proceeds of $57.5 million in a public offering. And as of June 30th, we had about $36 million in cash to continue advancing permitting early restoration work while also maintaining field operations. We are very proud to have broken ground recently on early cleanup activities and water quality improvements at site under the ASAOC agreement with the EPA and U.S. Department of Agriculture. The first 4-year phase of this project includes removing 325,000 tons of legacy waste and tailings away from the river and rerouting streams to keep clean water clean. Earlier this year, we launched our sustainability roadmap and our 9th annual sustainability report. And in late June, we received our first permit for the project, the Clean Air Act permit to construct, marking a significant milestone. Looking forward, we have some exciting milestones, including the next major permitting catalyst in the 4th quarter of this year that we expect. Despite all of our recent achievements and near-term catalysts, we continue to be significantly undervalued relative to our peer group, with nearly all of the pre-permitting projects trading at a multiple of 2 to 4 times where we are trading today. We expect a significant re-rating to occur as we advance through the permitting process, but we also believe that there is opportunity today with investors who recognize the strategic value of our asset for its antimony and who value companies with ESG principles that are foundational to their business plans. So summing it all up, Perpetua Resources is unique because we bring solutions. We have a large, low-cost, and high-grade open-pit gold mine. We will offer the only domestic mine source of the critical mineral antimony, and we will use mine development to fund restoration at an abandoned mine site. Not only is our opportunity unique, but it is also the right time. Our company is trading at a significant discount to our project's value, and as we hit our next permitting milestones, we expect our valuation to significantly improve, creating value for all of our shareholders. In addition to our well-rounded and experienced executive team that you can see here, we are very fortunate to have a strong board of directors. You can see here that several of our board members have experience at some of the largest mining companies in the world, and others have relevant political and financial experience to help guide the company forward. And turning to our capital structure, you can see on this slide that our largest shareholder, Paulson & Co., owns about 39% of our outstanding shares, and we have a large number of other institutional shareholders as well. Our second largest shareholder is Sun Valley Gold, followed by Kopernik. Overall, we have about 63 million shares outstanding and about 66 million on a fully diluted basis. And again, our cash balance was 36 million as of June, and we are well capitalized to continue advancing through the permitting process, and we have no debt. So thank you very much, and with that, we can open up for questions.
Thank you very much for a great presentation, Chris. As you mentioned, we'll now move on to the question and answer session. I will begin here with your first questions. It's more operational. Could the DoD Phase 1 antimony evaluation be completed in a shorter amount of time?
Yes, it could, but it has been laid out to take about 6 months. So starting October through March of 2023. There are 2 different programs, 2 different grants we received. The first is just taking our ore from Stibnite and seeing if we can turn that into antimony trisulfide. So that's a simpler program to assess. The second would be looking at taking antimony metal, antimony concentrate that's produced at our site, and then turning it into the metal and then looking to turn it back into antimony trisulfide to meet the military specifications. So all of that, takes time. It is a desktop exercise, if you will, on the ladder, and so that takes time.
How's the water cleanup going?
It's going really well. We just had some folks up at site recently over the past week or 2 that commented that they were pretty surprised that just the scale of the work going on. This summer's work program, which is soon coming to an end and will close up for the winter season, was really more about diverting some of those streams and helping to keep clean water clean. And then next year, the plan is for some of that larger earthworks movement, and including that the majority of that 325,000 tons that I mentioned earlier, that's slated to start next year.
Logistically speaking, how is the 325,000 tons of mine waste and historical tailings being moved?
So the 325,000 tons related to the ASAOC program is before we even start mining or constructing the mine. So this is all early action cleanup which is through a work program, and an agreement that we signed with the EPA and the U.S. Department of Agriculture. There are additional restoration plans as we get into mining that are included in our plan of operations that we submitted to the Forest Service. So once that's approved, we can continue that work, but those are slightly different scopes of work. The other thing I would just mention, and a distinction I would draw, is there's 325,000 tons in the ASAOC work. There's also 3 million tons of tailings of historical tailings from previous operators that we plan to reprocess early on in our mine plan. So that's down the road a bit. And then there's an additional about 7 million tons of waste rock and other material that we'll repurpose, but that's all part of our mine plan.
What needs to be done to convert resources into reserves?
As Chris highlighted, we have 4.8 million ounces of proven and probable reserves, and that underpins our feasibility study and all of the figures that Chris walked you through earlier, including, that are aligned to what we're trying to get permitted right now. Given we've got that additional 1.2 million ounces of resource, once we get permitted and begin construction, we would likely start up more drilling and exploration and look to convert some of those resources to reserves. But right now we've got 4.8 million ounces of solid reserves that underpin the economics you've seen. So no immediate drilling going on. Focus on, we believe we'll unlock the most value by getting our current mine plan permitted and getting to construction. So that is our focus. But we certainly believe we could convert some of those resources to reserves with a bit of drilling.
If the mil-spec test results show that the mine is able to produce military-grade antimony trisulfide, do you expect to accelerate the development and build out of the mine? And do you think that the Department of Defense would help to fund the project?
We are focused first on proving our ore can turn into antimony trisulfide. As Chris said, we're quite confident, given it was our site that was instrumental in coming up with the current mil spec for the military. So we will focus on phase 1, but we'll be looking at phase 2 funding opportunities on the back of that. And then I think we're all, there's lots of antimony was included in the Inflation Reduction Act. You've seen it in a lot of legislation being tossed around in DC, and there's a lot of funding available for critical minerals. And so we do plan, as we prove that our antimony can go into mil spec, then hopefully there'll be some funding available that can help ensure this critical mineral supply chain is established here in the U.S.
How hard is it to recover the antimony?
It's actually a really simple flow sheet. So when you look at our flow sheet, we would essentially take any of our high stibnite sulfide and float it and produce an antimony concentrate at site. So super simple in terms of processing relative to the pressure oxidation circuit to recover the gold at site. The other piece, again, this antimony trisulfide we're talking about is really, really high purity stibnite essentially. And so again, we believe we've got that. And so whether it's, selective mining, essentially before you put it through the float circuit, you determine the level of purity or grade before it goes in there. And the first program would be saying, hey, is our ore pure enough to just go straight into the antimony trisulfide needed? So I hope that answers the question. Chris, anything you'd add?
Yeah, just to add on to that, one of the questions I get a lot is what is the grade of our antimony reserves and resources? And I think it can be somewhat misleading if you just look at those tables on a standalone basis, because the mine was designed really around the economics of the gold with antimony as a byproduct credit. So what that does is it makes the grade look lower than it actually is. Included in our feasibility study is an additional resource table that looks at the subdomains of antimony, more of on a standalone basis, and those are highly concentrated, mineralizations within the wider pit design. So if you look at just those subdomains, the grade is a lot higher. So just to get to Jess's point about high grade needs of Department of Defense, if you look at the antimony more exclusively, you can see those higher grades pop.
And using the visual Chris has up on the screen, so once it goes through the crushing, sag, and ball milling, that gray triangle on the screen, then you essentially look and say, hey, the high stibnite sulfide, and that's the subdomain stuff Chris is talking about. So we know the areas of our different pits that have high antimony, and so that gets pulled out separate and run through. And that's much higher grade than if you take the average of all of the ore, which includes the low stibnite sulfide.
How much assistance are you getting from the U.S. Forest Service with the river cleanup?
The agreement we signed, the ASAOC that Chris mentioned, was with the EPA and the U.S. Forest Service. We are financing it and doing all the work. They essentially oversee it and make sure it's per the agreement. So I wouldn't say they're necessarily helping do the actual work or cleanup or financing it all. That's all us. But they are overseeing to make sure it's in alignment with our work plans.
Are you looking into potentially purchasing any land packages surrounding the Stibnite Gold Project?
No, we're quite happy with our land package and claims. Again, we've got a solid reserve base that lays out a 15-year mine plan, and we've got some exciting exploration targets at depth, so potential underground in the future, or some extensions and antimony deposits that could get interesting, but all within the footprint of our current plan of operations.
Can you shed some more light on what your plans are regarding the historical tailing left on the property?
We'll reprocess about just under 3 million tons of historical tailings. So we'll send those through the mill, and once processed, we'll, any additional tailings that there are, we'll put those back into a lined tailings facility that we'll construct in the same place that the historical tailings are today. But the difference being we'll line that and then cap it at the end of the mine life. There's an additional about 7 million tons of waste rock and previously used material around that tailings facility and in it that's not mineralized. So we won't send that through the mill, but we will have to move it, and we'll use a lot of that to buttress and shore up the new tailings facility, if that makes sense.
Field evaluation re-rate is coming once catalysts kick in, but you also feel company is undervalued today ahead of those catalysts. Please clarify and why.
So big picture, I think we're trading where we're trading because of some fatigue around the permitting process. As Chris presented, it's been a long process. We're 6+ years into it, but I think the market is missing how close we are to major milestones and catalysts. So this slide that Chris has pulled up shows our process to narrow the scope. On the left, in August of 2020, we had a draft environmental impact statement go out to the public from the Forest Service. We're talking thousands of pages that essentially analyzed those 5 alternatives that are the blue boxes. And that went out for public comment, and we received 10,000 comments. And while 85% of them were positive, we saw opportunity for further improvement in our mine plan, and we submitted what we call a modified Pro 2, so an improved, refined plan in late 2020, which is aligned to our feasibility study, the same mine plans. And the Forest Service essentially eliminated 2 alternatives then, and this supplemental that we're expecting to hit the streets very soon is really just looking at our improved, refined mine plan and 2 access routes to site. So that has been the majority of the work over the past year and a half, was to narrow this scope to these 2. And then we expect them, when the supplemental hits the streets, we expect them to choose a preferred alternative. So from that point forward, we're hopeful it will be our preferred alternative, which is the top one, the burnt log access route to site. The rest of the process is truly just focused on our proposed plan. And so all of the time and work and analysis that's gone into these 6+ years has been completed. And now it's really taking our proposed plan through the final steps of the process.
If the DoD phase 1 goes well, any idea of just how much more money they may commit to a phase 2?
I think, wouldn't want to speculate on that. There's a process and we'll go through that. I do think, Chris, in one of the recent acts, I think through Congress, they did have $10 million set aside for studying antimony processing in the U.S. So that would be what we're focused on, a portion or all. And so that was approved, I think, for 2023, if I remember. Chris will probably look up the details here as I'm talking. And so that's really then taking it to the next step and talking about processing in the U.S. as well. But then bigger picture, in terms of funding, I think, again, there's lots of funds available for critical minerals. So when we look at project financing this project for construction, I think there could be, bigger opportunities that we could look into as well.
Yeah, and the bill that you referenced was the Defense Appropriation Bill, I believe, for 2023. There was $10 million earmarked in there for DoD to study secure sourcing of antimony trisulfide. So similar to the grants that we applied for.
Yep. Thanks, Chris.
How much do you spend monthly, and how long will your cash take you?
Yeah, so we're averaging about $2 to $2.5 million per month, or somewhere right in the middle there, depending on the month. So in the summer months, when we're doing ASAOC work, it's closer to the $2.5 million per month, but in the other months, it's closer to $2 million per month. So if you take our cash balance and look at that run rate, we're well into the second half of 2023 to continue permitting.
Do you think that you will be able to maintain the $400 to $600 all-in sustaining costs once you go into production?
Obviously, inflation and cost escalation is on everybody's minds, but certainly in the mining industry. I think if you look at a couple of the drivers of our low costs, I would say those are independent from some of the supply chain constraints that we're seeing today. So some of the big drivers that I mentioned of our low costs is clean, cheap Idaho hydropower. Second driver is a low strip ratio, which isn't impacted in itself by supply chain constraints. And then third is our valuable byproduct, antimony. Our feasibility study assumes $3.50 per pound antimony. And recently its antimony price has been around $6 per pound. So I think some potential cost inflation could also easily be offset by higher antimony prices, which is a byproduct, a byproduct credit to our costs. So we're hopeful that any potential cost inflation can be slightly offset by some of those other factors that I mentioned, in particular higher antimony prices.
What catalysts and milestones should shareholders keep an eye open for in the near future?
Yeah, I think permitting is the big one. So I think the supplemental draft EIS coming out in the next quarter, in Q4 of this year, will be a big one. I think that'll show, I think we're trading today as if we're not going to get permitted. And I think successful comment period, and if the Forest Service designates our project as the preferred alternative, again, narrowing that scope, that'll provide a lot more clarity for the next steps in the process, which is a final EIS and a draft record of decision, somewhere around 6 months after we think the the draft supplemental is out in Q4, and then maybe about another 6 months after that for the final ROD. So those are sort of the key NEPA permitting milestones ahead of us. And the reason that we focus so much on NEPA is because many of the other permits that we need for our project are linked to NEPA. So they need the final NEPA record of decision before they can check the box and get that permit. So that's why the NEPA process essentially drives the whole permitting process for our project.
Can you comment on the government support for antimony and what that means to the mineral space overall? I
think it's clear securing our critical minerals supply chain is very important and has bipartisan support in DC, and you've seen it. You know, you're hearing rumblings now of Manchin and other legislation coming forward on permitting reform to help support critical minerals and getting those permitted quicker. I mean, I don't think anyone can say that Canada or Australia are any less stringent environmentally, yet they can get mines permitted in 3 years versus our 7 to 10 year average. So that needs to change. And I think critical minerals and the need to secure those and the clean energy transition is really driving that discussion and the bipartisan support. So that's really exciting to see. When you look at their list, the US's list of 50 critical minerals, and what percentage of those critical minerals come from outside the US or outside the Western world, antimony is in the top 5 in terms of not able to get it here. There's a little bit of recycling done here, and there's US antimony in Montana that processes some. But there is no mined source of this critical mineral in the US, and that makes it very difficult when China and Russia are the major producers around the world and control supply. So I think it's safe to say that there's a lot of support for domestic production of antimony.
Just how much is the US falling behind countries like China and Russia in the sourcing and production of antimony?
Yeah, I think the better way to sort of characterize it is we're behind. We fell behind a while ago. And so now we have to be really thoughtful about, I think, how we catch up and bridge that gap, because it's not like we are falling behind. We've already fallen behind. So we need to really think strategically about what we're going to do to set us up and bridge that gap. And I think we've been encouraged to see, again, what we're hearing out of Washington in support for domestic antimony production.
Honestly, we're lucky as a country that we're 6 years into this process already, because had we not have started it 6 years ago, then we'd be sitting here saying, wow, we need antimony, and you'd just be kicking off the NEPA process. And so I think we're quite lucky. We've got a solution. We've got a solution for the environment. We've got a solution for the domestic supply chain of antimony, and we are ready to deliver.
Just how critical is antimony from a military perspective?
Very. So it's used in everything from being a flame retardant in military uniforms to, small and medium caliber munitions and mortars, in flares and grenades and shoulder launched munitions, all of which, by the way, the Western world has been sending to Ukraine recently, which isn't helping the US stockpile. So it is literally used in just about everything the military uses.
Is the Hard Rock Act solely for the purpose of defense?
Might have to get back to you on that. I haven't read it cover to cover yet, but I believe there's broader intentions or broader uses for that piece of legislation than just military. But honestly, I don't know.
Thank you very much, Chris. Now, this concludes our question and answer session. Before we go, I'll leave you both on for final remarks.
Again, thank you for your time today. Perpetua Resources trades on both the NASDAQ and the Toronto Stock Exchange under ticker PPTA. You can find more information, including our contact info, at www.perpetuaresources.com. Thank you, and feel free to reach out with any additional questions.
Once again, this was Perpetua Resources, currently trading on the NASDAQ and the Toronto Stock Exchange under ticker symbol PPTA. On behalf of Renmark, I want to thank everyone in Chicago and surrounding areas for joining us for today's presentation. We do hope that you stay tuned for future presentations in your area. And until we meet next time, stay safe and be well. Bye-bye.